their design principles, and our key learnings. I shall also touch upon the unique steps that we have taken and the future work in this space. UPI, as you have mentioned, is now witnessing about 13 billion transactions every month. 13 billion transactions every month. Now, despite this, very impressive progress, there is still considerable scope for increase in digitalization of payments. This can be facilitated through CBDC, which has the same advantages of cash, namely anonymity, ease of usage, and finality of settlement. Specifically, in the context of cross border payments, the feature of settlement finality can substantially reduce the cost of transactions. Further, CBDC can drive financial inclusion and provide much safer alternatives to private digital currencies, which are, according to us, potentially dangerous. In India, we have adopted a phased approach to CBDC implementation. The wholesale pilot was launched on November 1st, 2022, and the retail pilot was launched a month thereafter on 1st December 2022. The pilots have tested the entire process of digital rupee creation, distribution, and usage in real time. The wholesale pilot use account-based CBDCs and are currently focused on government securities transactions using a centralized ledger and overnight call money transactions between banks using distributed ledger. The basic objective of the wholesale pilot is to mimic the settlement efficiency of cash as it removes the need for central counterparties, settlement guarantee infrastructure, or the need for collateral. Wholesale CBDCs can help in better monitoring of transactions from a risk perspective by moving to what you call a delivery versus payment DVP1 method, wherein both the cash leg and the securities leg of a transaction are settled on gross basis, as against the present DVP3 mode where both legs of transaction are settled on a net basis. Now, going forward, other instruments like commercial papers, certificates of deposit will be tried out in the pilots, along with securities tokenization features. The retail pilot uses token-based CBDCs on a blockchain and enables both merchant payments, that is P2M, and person-to-person, that is P2P payments. The retail pilots are expected to create familiarity with the CBDC, which has features of both cash and digital instruments. We have leveraged the existing merchant infrastructure on the UPI to facilitate CBDC transactions. We have also enabled interoperability of CBDC with UPI. While the number of transactions have reached a high of 1 million a day, we still see preference for UPI among the retail users. We, of course, hope that this will change going forward. Now, going forward, the advantages of CBDCs will be more visible when we enable offline use and programmability features. Let me also mention that a key objective of the pilots has been to study the change in consumer behavior vis-a-vis bank deposits. We need many more transactions to understand its wider economic effects, especially on monetary policy and the banking system. I would now like to turn to some of the important design principles and key learnings from the pilot, and I would like to list them out. First, we have envisaged our CBDC as non-remunerative by making it non-interest bearing. This feature should mitigate any potential risk of bank disintermediation. Second, we have adopted a two-tier distribution architecture where the central bank creates the CBDCs and the banks distribute the CBDCs. Third, the digital rupee CBDC currently has fixed denominations similar to physical currency. This makes it easier for users to relate to CBDC as a digital form of cash. We are, of course, open to other design choices and will try them out in our future pilots. Fourth, anonymity can be addressed through legislation and or through technology. For example, through permanent deletion of transactions. That could be one method. The basic principle is that CBDC can have the same degree of anonymity as cash, no more and no less. Fifth, one of the key features of cash is that it works offline. We are working on making the CBDC transferable in the offline mode also. We are also introducing programmability features to promote financial inclusion and provide other value-added services under CBDCs. Sixth, the design and scalability of technology like permissioned blockchains for CBDCs, which we are using currently, require improvements to meet the challenges of population-wide adoption. Seventh, and finally, we have also recently announced the participation of non-banks in the pilot, with the expectation that their reach can be leveraged for distribution of CBDCs and for providing value-added services. To conclude, let me say that so far we have gained significant insights from the two pilots, wholesale and retail, on various aspects such as design, technology, and user behavior. These insights are facilitating scalability, resilience, and agility of the CBDC system. The pilots are also enabling us to make informed decisions like positioning the CBDC alongside the UPI. CBDC offers unique value proposition as a currency system, a store of value and anonymity while complementing the existing digital payment systems. I will stop here. Thank you very much.
Thank you very much for that overview. There are a couple of things that I think would really be interesting to follow up, especially the link between the retail CBDC and the existing payment system. I think this is a question that many central banks face, which is how much weight should we put on fast payment systems, how much on retail CBDCs. I think what you've described is that you're designing it from the ground up to make sure that these two systems are interoperable. But I would like to follow up on that in the second round. Joachim, it's great to have you here. Thank you for joining us. I'd like to tell you an anecdote, actually, before I ask my question to Joachim. Recently, we had the BIS Leadership Forum, which is a forum for the managers, everyone from the middle management up, and it's a way to sort of renew our purpose. And we invited Joachim to give the keynote speech, and he gave a very, very inspiring keynote speech where he described the transformation process that he's leading at the Bundesbank, Wandel, as it's called. And Joachim, you said that innovation is a key part of this process. You compared this whole process to running a marathon, where you need the preparation, the training, and a strategy. So share with the larger group what you told us, and where does the digital euro and the whole CBDC program fit into this transformation process?
Thank you very much, Yun. The truth is that I never did a marathon on my own. But first of all, it's really good to be here, part of this conference, doing this panel with my esteemed colleague Shaktikanta and Fabio. I have the pleasure that Frankfurt is so close to Basel, so for me it's just a 300-kilometer trip, 200 miles. And for many of you, I realize that I guess some of you are jet-lagged. You did such a long trip to come to Basel. This is wonderful to discuss this very important topic. I come back to what I did in that speech when you referred to the management conference, and I'm really happy that I gave some food for thought. I think we labeled this change of the Bundesbank Wandel. Wandel is the German, let me say, expression for change, doing something different. And I can tell you the tradition of the Bundesbank, a 70 years tradition, it is a challenge to change a central bank. And I'm not sure if central banks are really used to these changes. I think the last change the Bundesbank did, the most significant change, went back more or less 30 years ago. So when the board of the Bundesbank came back 2 years ago and explained to the colleagues, yes, we want to do something different, everyone was a little bit shocked that something is coming from top down and they want to change something. Often it was the other way around. So, but after 2 years, everyone is now completely aware of the fact that we have to change. And now I'm coming back to what we are discussing here. The world outside is changing. It's becoming more digital. So, and also the business model of the central bank is changing to a certain extent. Yes, I guess in 10 years, I guess the mandate of central banking will be the same. It's safeguarding price stability. But how to get there, all the instruments we are using, the services we are providing, they will be, it's my forecast, completely different from today. And so it was clear to me, to the whole, let me say, board of the Bundesbank, that we have to change. So what we did is that we tried to find out a way how to get there. I think it was clear that we have to change the way we are working together, overcoming silo thinking. This is of utmost importance. Then embracing new technologies. Also find the right people to do this. I think this is also a very challenging part. People with a different background, not the typical background we have in central banks, that we had in central banks over many, many decades. And then also what we learned is that it's communication. It's all about communication, to really convince people internally we did something good for the last 7 decades, but now we can do it in a different way, or we have to do it in a different way. So we started it also by changing internally all what we do in terms of processes, front-to-end process, how to make this more digital. So we became, let me say, a kind of a startup central bank, how to change things from front to end, using new technologies. We established a new department, so the new department head, she's sitting over there. It's about strategy and innovation, Camilla Holtgreve. So we are trying to find a holistic way how to do it. Now coming back to CBDC, this is what you asked me. I think what we learned over the last 10 years, and especially in Germany, we are very addicted when it comes to cash, using cash. But over the last years, yes, we see that there is maybe diminishing attractiveness of cash. So if part of, let me say, your core product is losing attractiveness, then you have to think about another new core product that is standing as a complementary product beside cash. We don't want to give up cash. But now I would like to see that we really get to a kind of a digital currency, the digital euro, that is being one of the most innovative CBDC you can think about. It should be innovative for wholesale, retail, when it comes to tokenization, when it comes to privacy. And I'm I'm not a very patient person. Not a very patient person. And my colleagues, they know that I'm not very patient. So I think we lost some time already, and now I believe we have to speed up. And I'm happy to see my colleague from India, Shaktikanta, and I learned a lot what India achieved when it comes to digital currency. And I believe now we have the momentum in the euro system, and my friend Fabio and myself, we will push this. Bundesbank will play a significant role here, how to get to this digital euro. And I think it's a necessity to really get there. And beside that, we have to change central banking. And as I said, central banking in the future will look different.
Thank you very much, Joachim, for that sort of insight into your thinking. I think what we all gained, from that dinner speech was, I think, the sense that we have to move. I'd like to turn to the second round, actually, and then turn back to you, Fabio. You can react to some of the things that have already been said. But one thing that I'd like to explore in the second round is something that you mentioned in passing, and also something that Joachim mentioned, which is tokenization. I think it links very much with the observation that you made that in the latest CPMI survey, we do see this greater emphasis on wholesale CBDCs. And in a way, wholesale CBDCs have always been around. I mean, they are the electronic versions of central bank reserves. But I guess it's the additional element of having this central bank money in the same venue as commercial bank money, perhaps other assets that allow programs to be written referring to all of these elements together, which thereby giving it greater functionality. And the CPMI has been working very intently on tokenization. You have the Future of Payments Working Group. In fact, the G20 has tasked the CPMI, together with the BIS, to write a report on tokenization and the broader systemic impact. So I wonder, Fabio, whether you could share some insights into your latest thinking on tokenization.
Well, thank you, Yun. This is a very important question, and you are absolutely right. Tokenization is the next step, the evolution of wholesale CBDC, and they have to be made compatible. First of all, let me say that the idea of tokenization is not new. There is historical research showing that tokens predate the invention of writing and are as old as accounting itself. What is new is the technology. Technological innovation affects the way tokens are created and traded, and will continue to do so in the future. Let me start with a very basic, simple, but important question. What are tokens? Well, generally speaking, a token is a representation of something else. So why do we want to use a token? Well, one reason is that the representation may be easier to use than the object it represents. To make this concept clear, let me use a simple example. Imagine that you go to the theater, to a cinema, and check. No, you don't go to a cinema, you check your coat. You go to a theater and you check your coat. You give your coat and you receive back a token, a ticket, to take with you into the theater. And the token, the ticket, would fit easily into your pocket. Would be much easier to bring with you the token, the ticket, than your coat. So in the language of economists, tokenization reduces frictions, such as those associated to storage, transportation, and exchange. Moreover, as you often remind us, money is a social convention. I would argue that the same goes with or for a token. Take the example I just gave you, the example of my coat. I accept the token, trusting that the person behind the counter, the person who gave me the ticket before, will be kind enough to keep my coat safe and return it to me after the show. But what happens if he or she doesn't? Well, this simple example illustrates that tokenization offers not just opportunities, but as always in life, also potential risks. To fully understand its opportunities and risks, we need to look beyond the token, to the platforms on which the tokens are listed, often using DLTs, the distributed ledger technologies. Platforms can, the fact that they facilitate a range of functions that are typically segregated in conventional market infrastructures such as issuance, trading, clearing, settlement, and asset servicing. This can lead to potential efficiencies by cutting out intermediaries and streamlining processes. But as I mentioned before, this also implies additional risks. For example, what if the token does not represent a one-to-one enforceable claim on the underlying asset. In that case, I cannot rule out the possibility that I may lose value to the underlying, relative to the underlying asset, or even end up with a worthless token if the asset is not there, if I don't get back my coat in the end after the theater. An appropriate legal and regulatory framework to secure the link between the token and the underlying asset is crucial. For example, the legal status of the token should be clear, and conflicts of interest between the holder of the token and the holder of the asset should be clearly addressed. But the risks clearly go beyond the legal and regulatory dimension. We also need to consider settlement finality, access, operational risks, cybersecurity, and fragmentation across platforms, and many other potential sources of risk. Against this background, tokenization stands out as an opportunity for central banks to improve wholesale transactions in central bank money. As I mentioned earlier, many central banks are now involved in CBDC projects, in wholesale CBDC projects. Let me give you an example from the Eurosystem perspective, as the Eurosystem is experimenting new solutions based on DLT, and how these experiments could interact with the target services. The target services are the infrastructure that we use for interbank transactions in the euro area. So how this could be used to interact with target services to settle the euro cash leg of transactions in central bank money. One option we are currently examining is to create a technological bridge between the central bank's cash settlement system and the external private DLT platform that manage tokenized digital assets. This option focuses mainly on use cases such as delivery versus payment, secondary market transactions, and life cycle management of securities. But we are also exploring another option that is an option based on the creation from scratch of a Eurosystem DLT platform for Euro central bank money settlement, combined with a technical interface between this platform and market DLT platforms. Based on this work, the Eurosystem has developed a framework to carry out exploratory work in 2024 together with the market. And the objective is to understand concretely what value added new technologies such as DLT could bring to wholesale settlement and capital markets, and how the different options compare from a business, operational, and technical perspective. Maybe I should conclude. Let me conclude by saying that tokenization is extremely important to the Committee on Payments and Market Infrastructure, to the mandate of the committee. As a standard setter, we continue to focus on the safety and efficiency of payment, clearing, and settlement. The core business of the committee will still hold. Its values will still hold, such as proper risk management, good governance, and clear and robust legal framework. But of course, this would be true whether tokens are used or not. Let me stop here. Thank you.
Thank you very much, Fabio. The importance of the legal framework, I think, reminds me of this of the saying that you quite often hear from the crypto community: "Code is law." But I think, Fabio, what you're saying is the law is the law, because you need some way of tying down the token with the actual underlying asset. In the same vein, Joachim, can I turn to you and perhaps pursue the notion of a unified ledger that you mentioned? Also, Augustin gave great prominence to it in his opening remarks. This is the idea that when we have a tokenized platform, when we have central bank money, commercial bank money, and perhaps other claims all on the same programmable platform, that we can actually achieve greater functionality. What do you see as being the biggest benefits of such a platform, and what do you see as being the biggest challenges?
I think, first of all, unified ledger technology is a very promising technology. This is for sure. I guess it's much more than maybe a vision to use, or in the future that we can take advantage of the full scope of the unified ledger technology. I think it is really more than a vision. I used once, when we met in Washington during the conference, we had a different discussion about that, a quote that came from a former chancellor of Germany, Helmut Schmidt. He once said, if somebody has a vision, he should ask a help for a medical doctor. And so I believe it's much more than this, that DLT is for me not a vision. It's something we should really use when it comes to central banking. And it was many times we refer to the Agora project. Augustine mentioned this, also Francois. And Agora is a marketplace. Agora is the ancient Greek name for marketplace. And a marketplace that takes advantage of, let me say, bringing together the central bank community and the private sector. And it was already said by Fabio, there are still some, let me say, open question how to get to the right legal framework. But I guess these are obstacles we can try to overcome, we can try to solve. I do not see that this is, for me personally, an ultimate constraint, but we have to think about, because it also goes deep into national legislation. So it's not an easy something. This is for sure, but I believe it is really something we have to work on. And it is, as I said, not a vision for me, that maybe I hope in the near future, we will have a DLT-driven platform that is covering all the services and interconnections we could provide as a central bank community to the whole world. And it would be a huge mistake not to get into such a direction, not to work on this, having a better knowledge. And as I alluded to in my first answer, I think this is much more than maybe a kind of a thing we can work on this, and really we can take enough time. I think we do not have this time. We have to really, as I said, to speed up on all this, because otherwise, if you would have asked me, I know it is recorded. If you would have asked me, if you would have asked me 20 years ago, is the central bank business model really, is it destroyable, yes or no? I would have said clearly, no. Now I'm not so sure anymore. And this is a reason, and that is the reason why we are sitting here. We have to work on our business model. And DLT is just a mean, or it's an instrument that could help us here to really get to that point.
Thank you very much, Joachim. In fact, there will be several sessions actually during this conference on tokenization. And I think we'll also hear immediately after this panel from Thomas Jordan the great strides that the Swiss National Bank has been making in the Swiss context on some of the sort of functionalities. And there's also actually, going back to the previous point on the importance of the legal framework, there's actually also a very important session on the legal framework surrounding tokenization. So enough of the advertising. What I want to do actually is now turn to Governor Das. Shaktikanta, you mentioned that one of the key sort of imperatives of your CBDC pilot program was to ensure interoperability between your retail CBDC on the one hand and the fast payment system on the other with UPI. And I think this is actually one question that we get a lot when we discuss CBDCs in the context of financial inclusion, in the context of the development of the monetary system, how do you decide whether you should put more effort into the fast payment system, the existing fast payment system, versus developing a new platform, a new instrument, and what are some of the synergies between the two? And I think, Shaktikanta, I think your experience shows that it seems that it is very much compatible, but presumably this is something that really needs a lot of consideration at the design stage. So perhaps you could share some lessons from your experience.
Thank you, Hyun, for raising these points, very relevant. And I must say that the interventions of both Joachim and Fabio have been very, very useful, and look forward to further deliberations and discussion on this matter. Now, I agree that there should be some connect between the existing fast payment systems and the emerging systems based on tokenized money, such as CBDC and tokenized assets, etc. In India, while rolling out our CBDC pilot, we have kept this aspect very much in mind. Benefits of tokenization are many, and the efficiencies are best realized when all components, that is, funds and assets, are tokenized. However, extensive study is required to substantiate these benefits. Further, token-based systems enable certain unique features which are currently not possible in the case of fast payment systems. Under the retail CBDC pilot in India, the feedback from the users reaffirmed the need for a connect between fast payment systems, that is UPI in our case, and the CBDC. We have combined the CBDC QR code with the UPI QR code and made it a single point of acceptance. We have also introduced interoperability between UPI and CBDC. Thus, if a customer makes a CBDC payment, the merchant can receive the money in his UPI-linked bank account if he does not have a CBDC wallet. On tokenization, I understand that there are several projects being undertaken by the BIS Innovation Hub in collaboration with central banks across various jurisdictions. It is generally believed that tokenization can improve efficiencies through atomic settlement, improved transparency, and regulatory compliance. It can also enable fractional ownership, efficiency in clearing and settlement, investor confidence, and possible cost reduction when deployed at scale. There are, however, potential challenges of technological scalability, interoperability, governance, accountability, etc., which need to be further deliberated. Having said this, let me also say that token-based systems present some unique advantages. Tokenization introduces two key concepts, namely smart contracts and programmability. The benefits from smart contracts and programmability arise from automation, which enhances efficiency, reduces reliance on intermediaries, and enables faster settlements. This in turn can lead to unlocking new possibilities in the financial system. For example, some functionalities like offline payments may be easier with a token-based CBDC than with a fast payment system, as tokens can be stored in the user device and would be available for transactions. On the other hand, in a fast payment system, connection to a central database would be required for every transaction. In case of programmability, token-based CBDC would allow a user to hold more than one type of token within a single wallet. Cross-border payments is also another area that is especially ripe for change and could benefit greatly from tokenization and unified ledger proposed by the BIS. Further, integration with smart contracts can enable execution of complex transactions automatically, fostering efficiency and reliability. I would now like to conclude by stating that in an ecosystem where both traditional and emerging technologies play an important role, interoperability between the two, that is fast payment systems and the new tokenized money, interoperability between the two will ensure that both work in tandem without causing a fragmentation. This would require a strategic and collaborative approach between central banks, financial institutions, and the fintech companies. The development of appropriate governance and operating framework spanning more than one country is a complex and very challenging, is a very challenging task ahead of us. I would like to urge the BIS to give specific attention to this area also, and we would be happy to be a part of that entire process of working further in this direction. Thank you very much.
Thank you very much for those insights. We are drawing to a close. Let me just give an opportunity to the panelists to come in with any reactions if they wish at this stage. But if not,
I guess Fabio.
Fabio, did you have something?
No, I only a very brief observation. I wanted to fully agree with Joachim when he mentioned that central banks in 10 years from now will be different. And I would expect that given the discussion we have had today and the importance of payments, digital instruments, there will be less economists, I'm sorry, Yoon, and more data scientists, more physicists, more cryptographers. The business will be the same, but as Joachim mentioned, the implementation of the mandate will differ substantially, and there will be a broader and more heterogeneous range of skills in central bank boards. But thank God I will be retired by then. Thank you.
Well, thank you, Fabio.
But
I think,
Yoon,
yes.
Yoon, maybe let me say, this is the reason why monetary policy in the Eurosystem is working so well, because Fabio and myself, we are agreeing on all the things.
I think, Fabio, what I would say is, data science, can be seen as a sub sort of area of economics. I mean, it is very much, it is part of, econometrics, statistics. So in that sense, I think economists will probably be around. In fact, what I would really highly recommend are the sessions on AI, actually. We didn't really spend much time on AI on this panel, although we did cover many of the other areas. One of the really exciting prospects of Agora is that once you actually have a platform where you have commercial bank deposits and central bank money together in a programmable platform, many of the frictions that is currently holding back cross-border payments can see really quite substantial progress. And I think the one area where AI and machine learning is known to work is in these compliance heavy processes. And Morten Beck, who is leading the Swiss Center, will have more to say about this shortly. But for now, let me thank the three panelists for this great way of kicking off the event. And I think we learned a lot, and I think we've come away being inspired and being better informed than ever. And I think we're just about in time, actually. So why don't we give the stage to the next session, which is Thomas Jordan. So thank you.
Thank you to all distinguished panelists and to Hyun for an interesting conversation. At the BIS, currently, the code check system, can you hear me? It's not tokenized, but no worries, you will receive your codes back. And we will definitely consider it for next year's summit. I think we're all excited to see where the CBDC journey will bring us. Our next guest will speak about implementing a CBDC in a real world. let me welcome the chairman of the Swiss National Bank's Governing Board, Mr. Thomas Jordan, who will showcase Project Helvetia 3, a wholesale CBDC pilot.
Thank you very much, ladies and gentlemen. Let me thank the BIS, especially my friend Agustin Carstens, for the opportunity to present and discuss Project Helvetia 3. It is a great pleasure to give you some insights into this pilot project of the Swiss National Bank. The pilot represents the world's first issuance of a wholesale CBDC on a regulated third-party platform to settle commercial transactions with tokenized assets. Helvetia 3 is a good example of how learnings from BIS Innovation Hub projects can be leveraged for real-world use. We started this work together with the Hub's Swiss Center and the private sector more than 4 years ago. In Helvetia 1 and 2, we jointly expanded our understanding of wholesale CBDC and shared the findings with the central bank community. We took advantage of this groundwork to launch Helvetia 3 in December 2023, bringing Swiss franc wholesale CBDC from a test setting to real use. In my remarks today, I will focus on 3 topics. First, I will share some preliminary insights from the ongoing pilot. Then I will discuss 2 alternatives to wholesale CBDC we are currently exploring, and I will conclude with reflections on the response of central banks to tokenization. Now, the tokenization of financial assets is gaining momentum. Switzerland has emerged as one of the leading centers in the adoption of tokenization within the regulated financial system. This raises the following question for the SNB. How can transactions with tokenized assets be settled in central bank money? Settlement in central bank money is crucial for 2 reasons. First, it eliminates credit risks and minimizes liquidity risk in settlement, thereby contributing to financial stability. And second, it reinforces the role of central bank money as the anchor for the monetary system. Helvetia 3 pilots tokenized central bank money for wholesale use, often referred to as wholesale CBDC. Participating banks can use Swiss franc wholesale CBDC to settle transactions with tokenized assets or tokenized bonds on 6 digital exchange SDX. SDX is a regulated trading and settlement platform for tokenized assets. Since the start of the pilot, 4 tokenized bond issuances and 1 secondary market transaction have been successfully settled in wholesale CBDC. Economically and legally, the wholesale CBDC used in Helvetia 3 is equivalent to sight deposits on the SNB balance sheet. Access to wholesale CBDC is restricted to banks and financial institutions which participate in the Swiss Real-Time Gross Settlement System, or RTGS system for short. Legally, wholesale CBDC is an alternative representation of sight deposits at the SNB. A key difference to sight deposits is that the pilot makes tokenized central bank money available on the same third-party platform where tokenized assets are held. This approach eliminates barriers in today's siloed financial market infrastructures. At present, financial assets and central bank money are usually held on separate systems that are linked in order to synchronize payments and asset transfers. With wholesale CBDC, as piloted in Helvetia 3, assets and central bank money are instead closely integrated. This reduces the need for synchronization and reconciliation and facilitates programmability. This approach aims to realize the benefits of tokenization, but also poses challenges. I would like to discuss two challenges relevant for central banks: governance questions and fragmentation of central bank money, and share with you how we address these in Helvetia 3. Let me start with governance. Issuing wholesale CBDC on a third-party platform entails a public-private partnership. The central bank delegates certain tasks related to the issuance and use of central bank money to the platform provider. This means that roles and responsibilities must clearly be defined, as must rights and obligations. In Helvetia 3, the SNB delegates certain contractually agreed tasks to SCX. At the same time, the SNB retains control and monitoring capabilities over the use of its wholesale CBDC. Such capabilities are made possible by operational and technical means on the SDX platform. Let me now turn to the second channel, the fragmentation of central bank money. Wholesale CBDC creates an additional pool of central bank money which needs to be managed. If wholesale CBDC were to be issued on multiple third-party platforms, central bank money would be fragmented even further. Measures to mitigate such fragmentations are needed. In Helvetia 3, participating banks tokenize sight deposits and de-tokenize wholesale CBDC through the Swiss RTGS system in a standardized automated process. For this to work seamlessly, the operating hours of the Swiss RTGS system and SDX are aligned. If multiple third-party platforms with wholesale CBDC were to exist, this approach could be replicated. De-tokenizing wholesale CBDC on one platform and tokenizing sight deposits on another would use the same process and would be facilitated by the Swiss RTGS system. The role of the SNB in this process would be to control the issuance and redemption of wholesale CBDC on their respective platforms. Now, my focus so far has been on Project Helvetia 3, which explores wholesale CBDC on a third-party platform. But there are other approaches to settling tokenized asset transactions. To understand the respective risks and benefits, we are examining two alternative approaches to wholesale CBDC. The second part of my remarks, I would like to describe them and offer a preliminary assessment. Now, the first alternative approach is linking the tokenized asset platform with the Swiss RTGS system. I will refer to it as the RTGS link. The second approach uses private token money, which is issued on the tokenized asset platform and which is bankruptcy protected and fully backed by sight deposits at the SNB. I will call this approach backed private token money. Now, the RTGS link employs a synchronized approach to settlement. Sight deposits and tokenized assets remain on different infrastructures. To settle a tokenized asset transaction in this setting, the transfer of assets and central bank money is synchronized by messages sent back and forth between the different infrastructures. This corresponds to the current process where central banks support links between their RTGS systems and other financial market infrastructures in order to facilitate safe settlement. An RTGS link could leverage existing functionality in the Swiss RTGS system. Central bank money would not leave the current sight deposit accounts, thus preventing fragmentation of central bank money. It would also avoid the governance questions arising from issuing central bank money on a third-party platform. However, an RTGS link would replicate the current process which builds on synchronization, this might limit the ability to improve the status quo. Now, backed private token money, in turn, enables an integrated approach to settlement, whereby money and assets would be held on the same platform. It would be accessible to banks that already have access to central bank money, and it would have risk characteristics similar to those of central bank money. If the token issuer defaults, holders of such private token money have recourse to the central bank money backing it. Backed private token money would reduce the need for synchronizations, since assets and money would be available on the same platform. Depending on the design, it could entail fewer governance challenges with wholesale CBDC in Helvetia 3, but fragmentation challenges would be the same. Compared to wholesale CBDC and sight deposits, however, backed private token money is not a direct claim on the central bank and thus requires a thorough analysis with regard to its regulatory treatment. Our work so far on the three settlement approaches suggests that they are all technically and legally feasible. They do, however, have different operational, governance and risk implications, and they may differ in their ability to deliver efficiency gains. It will therefore be important to carefully assess the respective benefits and risks of the approaches in order to decide on the best way forward. Ladies and gentlemen, let me conclude. Technological innovations such as tokenization may help to make today's financial system more efficient. This raises the general question of how central banks should respond to tokenization. As with any technological innovation, central banks' actions must reflect its mandates. And these actions may depend on the relevance of tokenization for its domestic financial market. If tokenization of assets becomes mainstream, settlement in central bank money will be crucial. This will allow central bank money to maintain its essential role as the anchor of the monetary system and to continue to serve as a safe means of payment. The SNB is currently investigating three approaches to settling transactions with tokenized assets in order to understand and compare their respective risks and benefits. This will then put us in a position, should the need arise, to take an informed decision on the choice of one or perhaps multiple settlement approaches. Given that the tokenization of assets is still a niche phenomenon, central bank must address the question of whether and how they should engage at this stage. They can take a wait-and-see stance and only act if tokenization is adopted at scale. Alternatively, they can push ahead independently of market adoption and offer new approaches for the settlement of tokenized asset transactions at an early stage. Or they can proceed stepwise to identify the optimal solutions for settling tokenized asset transactions together with market participants through experiments and pilots. The Swiss National Bank is pursuing the third option. Through our Helvetia 3 pilot, we are contributing to the private sector's exploration of how tokenization can improve the current financial system. The world's first issuance of wholesale CBDC on a regulated third-party platform underscores our commitment to facilitating technical progress while acting prudently and responsibly. Thank you very much for your attention.
Thank you, Mr. Jordan, for the showcase, the BIS Innovation Hub Project Mandala on shaping the future of cross-border payments compliance.
Thank you very much, Kadruta, and good afternoon, everybody, and welcome to the BIS Innovation Summit. Now, mandala. Mandala is a symbol that signifies cosmic unity, balance, and harmony. It is the universe in its perfect shape, where all the stars and planets have lined up. So when it came to naming a project that related to compliance, we thought, well, where else can we go? We really need the mandala of compliance. It's well known in the world of compliance that it's compliance checks and the processes are manual, they are complex, and they're slow. They cause a lot of friction in processes, and particularly in cross-border transactions. So we also found this actually in one of our earlier projects, in Project Dunbar, where we looked at international settlements of multiple CBDCs. And one of the findings from that project is that we need to pay more attention to compliance processes and how can we streamline them. So what we did is we partnered with a number of central banks, 4 central banks to be exact, as our core partners on this project. They are the Reserve Bank of Australia, Bank of Korea, Bank Negara Malaysia, and the Monetary Authority of Singapore. And I'd like you to hear from them right now. So if we can play the video, please.
MAS has been collaborating with the BIS Innovation Hub in Project Mandala. Building upon the purpose-bound concept, we explore a compliance-by-design approach.
The initiative explores the potential of encoding policy and regulatory requirements into a common protocol.
Reserve Bank of Australia is delighted to collaborate with the BIS Innovation Hub.
Bank Negara Malaysia is committed to this collaborative exploration to address key challenges in the space of cross-border payments.
Project Mandala could streamline compliance and holds the potential to enhance cross-border economic activity.
Compliance checks are automated through the use of smart contracts. This aims to enhance the transparency and efficiency of cross-border payments while remaining regulatory compliant.
This is an exciting project which will uplift the efficiency and security of cross-border payments.
We believe automation of regulatory compliance procedures could pave the way for international transactions becoming faster and less complex.
So there's our problem statement, and you heard the term compliance by design. And what that means is simply embedding compliance into an infrastructure such that when processes are run, the compliance checks are done automatically. So when we conduct transactions, the compliance checks are done automatically. And the proposal here is we propose to encode country-specific compliance in a protocol layer using smart contracts to be able to establish a system on a distributed ledger that can work with existing asset settlement systems as well as new and nascent technology. So it could work with, let's say, CBDCs as well as RTGS systems. This was really about looking at how do we take new technologies to improve what we have today. So we wanted to really retain the requirements, the compliance requirements in each jurisdictions, and see how we can improve the process and automate that process. And the idea is that it will automate these compliance processes and streamline them, as well as really create transparency and some consistency in the process. So, same profile transactions will come back with the same compliance requirements, and there's no guesswork required. So commercial banks can benefit a great deal from a system like this, and central banks can also benefit in that they can use this system to be able to conduct real-time, compliance monitoring if they so wish, using the system. So this is how it works. Basically, a bank initiates a transaction from Bank A to Bank B. Usually they will exchange basic information such as the amount, the purpose of the transaction and the beneficiary details, and they will exchange that information peer-to-peer. Now, the Mandela Protocol will then take that information and it will determine what are the compliance checks that are required for that particular transaction. And they could be multiple compliance checks. You could have AML-CFT compliance checks. There might be sanction screening, capital flow measures, for example. So there might be multiple, but it will calculate the same requirements for the same profile transaction. Next, it verifies compliance with these requirements. And this is done through a secure privacy-preserving method. So that was really important as one of the requirements for Mandela. Now, once the compliance checks are all completed, it will generate a verifiable proof that can then link itself to the transaction, and this again could be any transaction on an existing asset settlement system or payment system or a new one, such as CBDCs or maybe RTGS, as I mentioned. It will link itself to that transaction and it travels with the transaction from its origin to its destination along the entire payment chain. And again, that privacy-preserving methodology was really important in this case. So if you take, for example, the requirement to do sanctions checks or sanctions screening, you'll find that with the Mandela Protocol, we could check that both parties or all parties to the transaction are not on any sanctions list, private or public, without revealing any of sensitive information through that process. So what have we found so far? Project Mandela is in its early stages. We are halfway through the the project. We have our 4 central banking partners. We also is ensuring that we're adopting an agile approach in true innovation spirit. And so we're testing and learning as we go. And so one of the use cases that we tested just recently is a Singaporean entity lending to a Malaysian entity. And what we found through that particular use case is that we can cut back redundancy and we can halve the number of steps that commercial banks have to do in that sort of compliance process. And this is on this particular use case. And what we found is the reason for that in this particular use case is that the protocol can calculate the compliance checks concurrently, you can conduct the compliance checks concurrently, and because the information is linked to the transaction along the entire chain, there's no need to redo or recheck the documentation as you go. Now, for central banks, the tabulation of CFM in real time is a real leap to improve the compliance monitoring as well. We are conducting a second use case. It's on our website and it's related to capital investment between an Australian entity and a Korean entity. We have a whole video explaining on how Mandela works on the website. If you're interested, we'd be very happy to talk to you about it. But the last thing I wanted to say on Mandela is it was really important for us to work obviously with our 4 key jurisdictions and our central banking partners, but also with commercial banks in those jurisdictions. So this is a public-private partnership. And this was important because both central banks and indeed commercial entities will be, if there's promise in Mandela and it makes sense to the real world, will be users of this system. And so allowing the commercial organisations to also see from a very early stage how is it being developed, provide feedback on what's required, ensuring that it is actually meeting their requirements as well, we can create something that potentially builds a bit more reliance and confidence and trust into something that public sector and private sector can use. So wish us luck with trying to find the Mandela of compliance. We will keep you posted with the updates, and thank you very much for listening.
Thank you very much, Maha. On a similar note, let us now turn to another BIS Innovation Hub project in the cross-border CBDC space, Project Enbridge. This showcase will be presented by Ms. Benedict Nolens, head of the BIS Innovation Hub Hong Kong Center. The floor is yours, Benedict.
Thank you. And I'm fully aware that I am really standing between your drinks and this presentation. So I will keep it short. So this is an update on Project Enbridge. So let's go back to what Project Enbridge is. It is a shared payment infrastructure that uses CBDC, in particular wholesale CBDC, of the participating central banks to achieve instant cross-border payments. So having listened to the panel just now, a lot of the concepts that they talked about, wholesale CBDC, one platform, interoperable by design, settlement finality, two-tier, atomic settlement, that's what we're seeking to achieve with the Enbridge. So in terms of the history of the Enbridge, it goes back to a proof of concept in 2021, then a prototype and a pilot in 2022, continued development and testing throughout 2023, 2024, and now we are quite close to reaching the MVP stage, or the minimum viable product. That's what MVP stands for. The Enbridge has been built on three key pillars. We always thought it is critical to not just think about technology, but to think about legal and governance. And we thought about them in parallel to thinking about the technology. It is often that you develop a technology and then you realize you're missing the legal and the governance aspect. We did not want it to be there, so we have a parallel process. So let me elaborate on each of these three tiles. So the first one is the technology. It is, as you might know by now, if you've read the reports, it is a decentralized network. That means it is built on distributed ledger technology, and each of the central banks is operating a node. It is open sourced to the participant central banks. That means that the participant central banks each can check the code, penetration test the code, review and audit the code. It is Ethereum virtual machine, or EVM, compatible. What this means is that any smart contracts that are built on Ethereum become interoperable with the Enbridge. So let's see if at any stage these smart contracts that are being developed, for example, for automated market makers, come to the right level of maturity to be usable in a central banking context, then there is already this compatibility. The system is also ISO 20022 enabled. This is very important for new financial market infrastructures, as it is the new standard. The system is privacy preserving. What that means is that every central bank only sees the transactions in its own CBDC, and that is very important. As I mentioned, the central banks are deploying the validator nodes, and each of the 4 participating central banks has deployed their validator node already. And then lastly, the commercial banks deploy ordinary nodes. I will show you a demo towards the end of this presentation. So now let me move to the exciting side, the legal side. Someone said the law is the law. And my background actually is in the law, so I'm quite passionate about the law. In sum, we have 2 key forms of agreements here. One is between the central banks and the BIS, and we call that the multilateral project agreement. This project agreement can be acceded to by new central banks through the accession instrument. It is a document attached to this project agreement that new central banks who want to join the project as a participant can execute. Secondly, we have the framework for the commercial banks, because I think we have some commercial bank representatives here. That is called the adherence agreement to the rulebook. And the rulebook has 2 core components: the platform terms, which are the key legal terms that govern the interaction of these commercial banks and central banks on the platform, and secondly, the technical terms. The technical terms for this system are quite voluminous because the system is significant. So let me now turn to governance. So we've also completed, as mentioned, a governance framework. It sets out our current governance structure, which is a committee-based structure. It also sets out our decision-making, including what we do with consensus and what we do through voting. So that is the key to the governance framework. In terms of the committee structure, we currently have a steering committee that is supported by 5 subcommittees. The 5 subcommittees cover the following 5 areas: technology, legal, policy, business, and risk and compliance. So with that, I will turn shortly to a demo. I would note that this is still the platform that is on the testnet. It will continue to evolve. Some of the functionalities will continue to be designed and continue to be developed. So you can now turn to the video, please.
This is a demo of the mBridge platform user interface. Please note that what you will witness are dummy transactions and no real data is involved. For the sake of time, all interfaces have been logged in and wallets have been issued with CBDC. Let's first look at a central bank's view. In this case, it's that of the HKMA. As you can see, the interface has a dashboard that provides summary statistics of the transactions on the mBridge platform. On the left-hand side panel, we can see the various functionalities available to the central bank, including access approval rights to onboard selected domestic commercial banks and the ability to set transaction limits and parameters, such as the maximum amount they can hold in their wallet or transact in a single cross-border payment. Central banks can also set alerts for foreign exchange rates agreed outside of a predetermined rate range for all currency pairs on the platform. They can also approve CBDC issuance and redemption requests and see their commercial banks on-bridge balances and transaction details. Here we have a Hong Kong commercial bank's interface, and suppose that its Hong Kong local corporate client wants to pay for the import of coconuts from a Thai corporate and has agreed to pay 400,000 Thai baht. As of now, the Hong Kong corporate's bank on mBridge has no e-Thai baht, so it initiates an FX transaction with a Thai bank to exchange e-Hong Kong dollar for 400,000 e-Thai baht. The maker enters the details, including the exchange rate that was agreed off the platform, selects the counterparty bank, and verifies the transaction with its security PIN. A series of compliance checks will happen in the background. The transaction then goes to the checker, who verifies the details and authorizes the transaction with the 6-digit PIN before it is sent to the counterparty Thai bank. If we now turn to the Thai bank's view, we can see that it has 10 minutes to accept the transaction, as shown here, after which the transaction will automatically fail if no action is taken. The Thai bank reviews the details and confirms the transaction. The atomic PVP exchange of both legs of the FX transaction now takes place. Within